Hello and welcome back to the channel, where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're focusing our lens on a very specific name that's caught our attention, Liquid Index Biotherapeutics Inc., trading under the ticker LABT. This isn't about chasing pumps, it's about understanding the mechanics behind these unusual market situations. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So let's talk about LABT. Liquid Index Biotherapeutics Inc. operates in the healthcare and biotechnology sector. It's a clinical stage biotech company developing antimicrobial products specifically from its bisphosphocin class to tackle a broad range of infections. This is a microcap stock with a market capitalization currently sitting around $4 million. Show company logo/info. Looking at recent price action, LABT has shown some interesting moves. Today it's up plus 4.5%, and over the last 5 days, it's seen a gain of plus 19.69%. However, zooming out a bit, the last 30 days show a significant drop of minus 37.90%. Volume-wise, today saw about 163,000 shares traded, which is quite low compared to its 30-day average volume of just over 3 million shares, a relative volume of only 0.1x. Its estimated float, the number of shares available for public trading, is a relatively small 1.8 million shares. What is cost to borrow and why it matters? Before we get further into LABT, let's quickly explain what cost to borrow is and why it's so crucial for short squeeze discussions. When an investor wants to short a stock, they first borrow shares from a broker, sell them, and hope to buy them back later at a lower price to return to the lender. The cost to borrow, or CTB, is the fee short sellers pay, typically annualized, for the privilege of holding those borrowed shares. Short animation, short seller journey. This fee is dynamic, changing based on the supply and demand for those specific shares. When the cost to borrow is high, it signals that the stock is in high demand to be shorted, or critically, that there's a very limited supply of shares available to borrow. These fees can easily exceed 100% annually, sometimes much more, becoming a significant ongoing expense for anyone holding a short position. Why this stock is hard to borrow right now? This brings us directly to LABT. Our screener flagged Liquid Index Biotherapeutics Inc. because its cost to borrow fee is an astonishing 730.8% annualized. Highlight CTB number on screen. Think about that. Short sellers are paying over 700% per year just to maintain their positions. This number is extremely high and indicates significant pressure on short positions. Coupled with LABT's relatively small estimated float of 1.8 million shares, this makes the stock genuinely hard to borrow. Unfortunately, the exact number of shares currently available to borrow is not publicly known, which will give us even more insight. On our internal 0-100 composite squeeze score, which factors in CTB momentum, borrow supply, float size, volume, and technicals, LABT currently sits at 41.4. While not the highest score we've seen, that 730.8% CTB is certainly a standout metric. Squeeze mechanics explained. So, what does it mean for LABT if a short squeeze were to occur? A short squeeze happens when the price of a heavily shorted stock starts to rise. As the stock climbs, short sellers begin to face increasing losses on their positions. More importantly, their high cost to borrow, in LABT's case, that massive 730.8% eats into any remaining conviction they might have had. Short chart with price rising and shorts covering this pressure can force short sellers to buy back shares to cover their positions, which means purchasing the stock on the open market. This buying activity, in turn, pushes the price even higher, creating a feedback loop where more shorts are forced to cover, amplifying the upward momentum. It's a powerful dynamic, but it's important to understand that a high cost to borrow does not guarantee a squeeze. It can also mean short sellers have strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. One major factor that can completely negate a short squeeze thesis, even with high cost to borrow, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can reduce the value of existing shares and, critically for short squeezes, it can provide new shares for short sellers to cover with, or even for new short positions to be established. Show gauge, dilution risk low for LABT. We have good news on this front. Our checks show no recent dilutive SEC filings such as -1, -3, or 424B found in the last 90 days. This means there hasn't been a recent public offering that would introduce new shares and potentially stifle any upward momentum from short covering. Recent reverse split watch. Another important piece of the puzzle for LABT is its recent reverse stock split. On June 22, 2024, which was about 44 days ago, LABT executed a 1-4-10 reverse split. A reverse split reduces the total number of outstanding shares and, proportionally, increases the share price. For instance, if you own 10 shares at $1 each, after a 1-4-10 reverse split, you'd own 1 share at $10. During reverse split animation, this action significantly reduces the publicly traded float, potentially making it even tighter and harder to borrow shares for shorting. Historically, many microcap stocks, particularly those that undergo reverse splits, tend to see renewed volatility or even a price pop within about a month after the split. While that is now slightly past the typical month window at 44 days, this pattern can still be relevant and contributes to the stock's unique setup. It's a tendency observed in some microcap names, not a guarantee. Again, I want to emphasize that this is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching for with LABT? The first thing is volume. Given its current relative volume of only 0.1x compared to its average, any significant uptick in trading volume could be a key indicator. Show volume chart, we'd also be looking for sustained upward price momentum. Keep an eye on any news or developments from LABT Biotherapeutics Inc., as biotech stocks are often sensitive to clinical trial results or regulatory updates. And, of course, that incredibly high cost to borrow of 730.8% is a persistent factor that short sellers have to contend with every single day they hold their positions. In summary, LABT Biotherapeutics Inc. LABT presents an intriguing case study with its astonishing 730.8% cost to borrow, a relatively small estimated float of 1.8 million shares, and a recent reverse stock split that tightened its share structure. While there's no guarantee of a short squeeze, these are the fundamental mechanics and data points that make a stock hard to borrow and potentially ripe for increased volatility. Remember, understanding these dynamics is key to navigating the markets. If you found this deep dive into LABT helpful, please hit the like button, subscribe for more unique educational content, and let us know in the comments if there are other hard to borrow stocks you'd like us to analyze. Thanks for watching, and we'll see you in the next video.